So this is the new kind of order block that I use them sometimes, time to time I use them. It's not my favorite, but I use them. What are they? Well, they're called breaker block. And breaker block is an order block, but it's different. It's not the down candle, if not, it's the up candle. Which in this case, this one, okay? This will be a breaker block. Okay, this is a breaker block, and breaker block is an up candle before the run on stops, which this was the run on stops, and then we break structure here. Did we tap into the breaker block? Not really, we did not tap into any breaker block. So that's something to take in note. Sometimes the breaker blocks do not get tapped into them. Okay, that's why I do not use them as much as other kind of utility for my point of interest, but I'll show you some breaker block examples. This one right here, we take their stop losses. This is an up candle. Before we take the stops, we go down, we go up. Can we have another example for a bullish breaker block? Let's see if we can have one. Probably we can get a better on the lower time frames, because on the higher time frames, most of the times, you don't get as much of them. Let's go into our session indicator to look into our sessions and to look if we get some kind of manipulation, okay? Some kind of run on stops, which would be right here. We run their stops, we break structure. This is a bearish example, but on the bearish, obviously it will be the down candle because it's the opposite of the order block, and this was a down candle. Did we get into here? Not really. Let's go down to the time. It taps into it and then it goes down. But does it really matter? It doesn't really matter, because it didn't offer us any entry. Over here, maybe you could have entered as well. It's not on our session, but we break structure right here. And as you can see, it did offer us an entry on this case, which was over here. Okay, this was a down candle and we tapped into it and we trend lower. So let's say, for example, you enter right here. Okay, let's say you enter on your order block, breaker block right here. Okay, which was also an order block, so it was the exact same thing in my opinion. That's why I don't use them as much, but I do from time to time. And this would have been your trade. Okay, pretty good trade. Takes liquidity from this low, goes up. Let's look for another example. Bearish, more likely, because this is a downtrend. Well, right here we run all their stops, we run them all. We break structure. Perfect. Okay, we break it, which was the down candle. Well, perfect, we have this down candle, which is the exact same thing as I was saying. There's an order block here, but that's good, because if you have a breaker block and an order block, it's a higher probability point of interest. Okay, so we think this was a run on stops. We ran all their stops, all this liquidity, we ran them, big displacement down. We go to the order and breaker block, and we just wait, because it's bearish, 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 until we start making higher highs and higher lows, such as this. Okay, and you could have gotten out, let's say, for example, here, because this was kind of your explanation that we're starting to break structure, and it will have been a 3.33 trade. Okay, that's how you use breaker block on the bearish. Let's see if we can get a bullish example, because we're on a downtrend right now, so it's harder to look for one, but let's see what we can do. We break structure here. Do we tap into the breaker? Not really. We do not tap into anything, so pretty bad. What do we have over here? We have this, we break structure, correct. I wouldn't take this as a break of structure. This doesn't look like this big displacement down. And as you can see, there was no real entry, even though if you waited for this big displacement leg and you wanted to enter a bit here, it was the end of the session, which would have given you the entry, okay? And your target, which would have been this highs, would have been taken, but I don't take trades outside of my trading entry, you know. We have a market structure break here, and this was the up candle, so this would have been an entry on the breaker, correct. Obviously this would have been a news, so I'm entering right here. Jokes on me, because it would have been a really nice trade, but I don't really care, because the exact same thing had happened like this, and I've seen it multiple times. Price just does this, takes all the liquidity from the people trying to buy here, and automatically goes up, okay? So I'm not taking a trade when it's a news, but this would have been an entry if you do take trades on news. Let's see if we can get an entry here, because this is a bearish as well. Well, we take their stops. We break structure. We never tested the breaker, as you can see. And we go down again. I'm not looking into any bullish. Let's see if we can get one. Let's see if it's possible, you know. The structure would have been all the way here, you know, like all the way there. So there was no real entry on the breaker. But well, let's look for another time. Can we get an entry here? As you can see, it, like I was already teaching you, perfect entry on the 75. I'm not inventing this. I'm telling you exactly what I already experienced and what I do know. So perfect entry there. Let's see if we can get one right here. Yes, we do. We break structure. We come up again. Up we go. Where was the breaker? Breaker was here. Okay, we take the stops losses as well. We run their stops. We enter here if you want to. And this is our target, which ends getting taken at the end of my session for a 2-hour trade, okay? Let's look for bullish, if we can get one. But well, I think you already understand, you know, like, I don't really need to teach you what is the bullish, because you already seen what I mean about the bullish. As you can see, another example right here. Perfect, perfect, beautiful. I don't really think I need to teach you, but there's one right here, which wouldn't have been, for example, a really nice idea, but because the real displacement was down, in my opinion. If I can go back to this and look for the 15-minute, okay, we have big displacement leg down, okay, we haven't taken this liquidity yet. Big displacement leg down, we took all their stop losses from here, okay. If we take liquidity, I will consider it more of a bullish example. Did we break structure? Well, yes, we did break structure, but it's kind of, okay, now we broke structure, but now you have to be very careful, okay, because you're on a previous day low. And as you can see, we're back into the range. We broke structure here, even though on the 15-minute, of course, it's bearish, of course. Are you willing to short right below a swing low? I am, and I'm going to teach you. If the price does this, this is a clean break below, okay? If the price does this, this is not a clean break below. This is a liquidity grab. We go up. Yes, it's likely to pull back from this zone, okay? Which is an order block right here. It's likely to pull back to this order block as well. It's very likely. Yes, it is. You can take advantage of this trade if you want to. As you can see, it's playing out. But in my opinion, it's not worth it because it took this liquidity, and it's also very likely for it to start trending higher. Okay, so that's my opinion. As you can see, touch the order block, and it's just like a ranging market. You can short the order blocks and the breaker blocks and whatever you want in a ranging market, but as you can see, it's trending higher. Let's see how it ended up. Okay, it ended up higher. Okay, so that's what I wanted to teach you as well, to take into consideration. Don't always be so robotic about market structure break, I'm shorting. Okay, market structure break, I'm longing. Okay, you need to be cautious because the market's going to fool you sometimes. How is it going to fool you? Because it wants your liquidity. Okay, I already taught you that it wants your liquidity, so you gotta be careful. You do not want to be the liquidity. Okay, you don't want to be the shorter right here, right below a swing low, and after a quick reclaim. Okay, you don't want to be shorting this, you know, because it's more likely to take this liquidity right here. Okay, and then I don't know why this. Okay, take this liquidity and then start doing this. Okay, taking liquidity, ranging, and starting to trend higher. Okay, it's most likely to do this kind of price action. Okay, you gotta be careful. Okay, and that's just what it happened. You gotta end up knowing how the market moves, and you'll get it when you start looking more to trades and trades. Okay, let's look for if we can get even one real, you know, perfect. As you can see, perfect entry right here, perfect entry. Let's see if we can get one bullish, because I'm getting tired of everything bearish. But well, the market was bearish on this part of the price, so we just gotta move until we find something bullish, you know, if there is anything bullish. Let's see what it replace. Okay, 50%, which is decent. Okay, there's nothing bullish. We just, like I already said, if the price does internal structure just like this, you do not want to short this. Okay, you want to short price when it does a market structure break really aggressive and one quick pullback. If it does one quick pullback, short it, short this, short it, because it's most likely going to start trending lower, you know. But if the price does this, boom, and just does this, you're not shorting this, because there's one big player starting to accumulate buying or positions over here, and he was manipulating the price to go lower, you know. As you can see, it went higher and then it went lower, but that's not the point. It doesn't matter what happens next. What matters as a day trader, of course, as a long-term trader, of course it matters this. But as a day trader, you don't care about what's going to happen this day. You care about what's going to happen this exact day, and you don't want to short this kind of price action. Okay, one quick thing to take note of. Let's see if we can get one bullish over here. Perfect. There's one bullish example right here. Okay, we take all their stops. Take them all. Take them all. All of them. We take them all. All. Okay, I already say all a lot of times, but I want you to understand. Then we break structure. Where do we break structure? This candle. Okay, this is the real break of structure, because what is this? This is not a real break of structure. This is a real break of structure. Then you can enter on the body of the candle, okay, of the breaker. You place your stop right here, because it's most likely, if it's going to take this low, it's most likely going to take all this weight, all this low, you know. This was a bought-up low. This was bought. Someone bought this low. Someone didn't allow price to go lower from this. So you're thinking this is going to be pretty much respect this area. So your price, I don't know, it was, I think, this high. This was the swing high. Yep, this was a swing high right here. And that's your objective, of course. It doesn't get all the way there, but this is quite fair enough, you know, like this is a decent trade, you know. Also, if you see price moving this way, I don't know what was this. This is probably something like FOMC meeting or CPI meeting, something of that nature. Well, you don't want to be on the trade right there. You know, you can trade your trade at one risk reward, pretty much here. You take it off and you're good to go. If you want to move it to your stop loss to break even, you can. It's true. But sometimes you're going to get a big slippage. Okay, it's just going to. I do not operate this, but I know people that do. So it's good for you to know that sometimes it's going to be a candle like this, and your stop loss is not going to matter. Okay, you're not going to lose this stop loss. You're not going to lose this. You're not going to lose this. You're going to lose this. Okay, you're going to lose 10 times what you think you're going to lose, because what if this is a 5-minute candle? Do you think this candle was just going up little to little, just like this? No, no, no. This candle was boom, out of nowhere, it just went up. How many percent? At one point it was all the way here. It just went 40.41% up in a 1-minute candle, okay? Because yes, it ended up being like this. In the 5-minute it looks like this, but in the 1-minute this was the original pump. It just went up, boom. And what if the news was just a down trade? What if it just did the same thing of this? We just take all their stop losses, okay? Run their stops, run them all. We run them all and then we go up, which ended up happening right here. You wouldn't have getting taken out if you were patient enough and you were brave enough as well. You would have been in, and as you can see, the breaker kept protecting price. Your stop was pretty much safe and you were good to go for a nice trade, you know. But in my opinion, it's not worth it because you're gambling, okay? But that's pretty much one example of the breaker block on the bullish example. Then we have this example as well. We have this huge pump, okay, after taking all these lows. Up we go, we break structure. We also have this, of course, this breaker block right here and this order block right here. You could enter at what it is, the 75%. Also, it's going to be with the breaker block right here. So you could enter below the 50, which is the breaker, and you would secure more an entry. But as you can see, it went even further from that, okay? But this is a nice entry. You do not need to catch the top or the bottom. And it just touched it and pretty much went up, okay? Went up, 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 up. And you would have, if you hold the trade, because, well, price action was bullish, overall structure just looks, as I already thought you, just looks like this. You would have gotten a nice trade, okay? Where does the price start looking bearish? Well, it starts looking bearish after this, you know? Does this look like a downtrend to you? This? Of course it does. Then it goes up, takes their stop losses, and then we go boom, like this, okay? We go like that. You're thinking, okay, why didn't it go to the 75? Let's go right to it. So you see what I mean about 75%. Big displacement down. Of course, big player involved. Let's see how it looked. Okay, looks like we took their stop losses the day before from this high. Okay, well, it didn't actually take them, but there was someone selling before that, you know. So now we have this huge candle which is being bought up. That's true, it's being bought up, but is the downtrend down? Well, obviously it's a downtrend, it's going down. Is it going down? Is it a downtrend, or are we up? Well, of course it's a downtrend, you know. So you could enter on the 75 of the 15 if it even gives an entry, which I believe it did not give an entry. Well, it did not give an entry on this case, but well, I'm going to explain you why it didn't give an entry right now. This is going to be your next topic, okay? This kind of price, what does this is? Why does the price do not go up from here? Why? I'm going to explain that, okay? So let's go into it. The next video, as you can see, price touched the 75% of this, okay? Right here, 50.57. No, a little bit lower, but it's good enough, you know. It's good enough. You can enter on the 50%, and it still offers you, let's say for example, you enter on the 50, which is right here. Okay, your stop is right here, your target is right here. It offers you a nice risk reward. And let's say for example you use this, okay, the 75, which is right here. Your stop will be, both stops will be here, here and here, and your target is here. As you can see, it's not a big difference, and this will make you not get so much trades lost when the price has this. Okay, on the other trades, when it doesn't have this kind of wick, you can enter on the 75. This is a special case, and I'm going to explain it later on. Okay, so that was all about the breaker blocks. Pretty basic, pretty simple. Let's go to the next topic. Okay, let's go right into it.